Good point there, because there is a play there where you may want to hold off on filing.
Right, and it could be opposite too. You could have had a worse 2020, so you want to file that one so you qualify. This doesn't get confusing at all.
Yeah, it's a lot to keep track of.
Hi everybody, today we're going to talk about the American Rescue Plan Act of 2021, also known as ARPA. My name is Ray Halstead. I'm here with Andrew McMillan. We're CPAs with REH CPA. Andrew, what can you tell us about this? It was actually a pretty significant piece of legislation. What can you tell us about it other than the fact that it ruined our tax season?
Yeah, passed right in the middle of tax season. That made a bunch of retroactive
Just a
changes.
hammer right in the middle of tax season.
Yeah, no, so I mean, you already alluded to it. There's a lot in this. So just to kind of hit a couple of the really highlights that we feel like are going to affect most people. One big change that they made was in regards to unemployment compensation. So if you received unemployment benefits last year in 2020, you can exclude $10,200 of that from your income if your total income is less than $150,000 for the year. So it's a cliff. It's like if you make $150,001,
right,
then you're going to have to pay back your
which is weird is
it's
whether you're single or married filing joint, it's $150,000.
It is.
Usually they'll do like $150 for a single, $300 for joint. It's not. It's $150 for both, and it's a cliff. You cross that by $1,
yeah,
and you lose it.
It's kind of odd.
It's odd.
Just not typically how we see these things, but it's how this one's written right now. So $10,200 of unemployment compensation can be excluded if you're less than $150,000.
And that's for one person. If you're husband and wife.
So husband and wife can both do this. So you can exclude $10,200, your wife can exclude $10,200. So that's a total of $20,400 potentially of federal income that is not taxable. So North Carolina, I know, has come out and saying that they're taxing it.
You have to do an add back
so
for North Carolina. They will tax you in North Carolina.
So, but for federal purposes, you get that exclusion. So big change. Never seen it before when it comes to unemployment compensation. But
well, and not to mention, so this is a change they made like within the past couple of weeks, and it was for last year. Yeah. So there's a lot of people that have already done their tax returns and paid taxes on that unemployment compensation. What we're finding out, so we just assumed, we were telling our clients you were going to have to amend your tax return, but from what we're hearing from the IRS right now is don't amend, that they are going to try to figure it out, which is scary, and send you a refund for the amount that you paid on those taxes. So we'll see how all that works, but as of right now, don't amend.
Right, but good news is you're going to get some money back if you already paid some taxes on it. So another big piece of this legislation is more stimulus money. So there's a third round of stimulus money that's currently going out. A lot of folks may have already received that third round of stimulus money, but it was $1,400 per taxpayer, and then another $1,400 per children on your tax return. So quite a bit of money that was going out again, and there are AGI limitations. They're a little bit harsher in this third round, I'd say. So if you're $150,000, from $150,000 to $160,000 of income, that your stimulus is going to phase out. And it's going to be completely phased out if you're making over $160K if you're married.
Right.
There's different. It's different if you're single, head of household, other filing statuses. But for married couples, if you're making more than $150K, you're going to start getting phased out. Once you make over $160K, it's completely phased out. So
something for a lot of people to think about and really seriously think about is that right now they're going to look at your 2020 tax return that's been filed to figure out if you've met that AGI limitation. But if you have not filed your 2020 tax return, they're going to look at your 2019. Right. So we have instances, actually a lot of instances, where clients are doing better on their 2020 and would not qualify for the stimulus, but if we don't file the tax return, then they qualify under their 19. So when we go to reconcile this in 2020, it's going to be just like the one for 2019 was, where you don't have, if you got overpaid, you're not going to have to pay it back. So for some people, it's going to make sense not to file your 2020 tax return yet until you get that stimulus money. Let them go off the 2019.
Yep, yeah, really good point there, because there is a play there where you may want to hold off on filing.
Right, and it could be opposite too. You could have had a worse 2020 , so you want to file that one so you qualify, right? But it will get reconciled on the 2020 tax return whenever we get it, or 2021 tax return when we go to do those.
It's just a timing game right now. Do you get it now, or do you get it when you do the tax return in 2022?
This doesn't get confusing at all.
Yeah, it's a lot to keep track of. So what also does, so kind of leading into the next piece, is they've done a lot of revamping of the child tax credit. In prior years, the child tax credit was basically a $2,000 credit that you got for every child on your tax return that was less than 17 years old, you would get $2,000. There's income limitations, but it's about $400,000 for a married person. So if you make less than that, you got kids on your tax return, you traditionally were getting $2,000 of a child tax credit for those kids. Yeah. So they have made some revamping changes to that. They've increased the tax credit to $3,000. And if you are less than 6, if you have a kid that's less than 6 years old, the credit's $3,600. So they give you a little bit, little tax shelters.
Right.
They gave you a little bit more there. And then
little Johnny's earning it.
yeah. So yeah, and then they also, before, you couldn't get the child tax credit if you were 17 years old. You got a reduced amount, a dependent care credit. So if you're 17, you're also eligible for it as well. So they've made some changes there, but to even more complicate things, what they're doing this year is they're actually going to start in July of this year, advancing half of that child tax credit every month to individuals. They're going to start sending that amount of money, figuring out what credit you're going to be eligible for, and start sending half of that money out to you, starting in July through December of this year. So, kind of complicated because that one is going to be different. We already alluded to the stimulus money doesn't have to be repaid, but the child tax credit, if you're wrong on that, if you get that money advanced to you throughout the year, you are going to have to repay that. There's going to be a reconciliation on your tax return done, and you may have to repay some of that money back if you've got it and shouldn't have. So there's going to be a tool, we're being told, on the IRS website where you can go onto the website and opt out of receiving that money up front if you want to, and just wait until you do your tax return to see how much you're eligible for. Every client's different. Some people want to go ahead and get the money and maybe have to repay back some later, or some people want to just, I'm just going to opt out and just let it get calculated on my tax return. So just be aware of that. Just be aware of the stimulus money that's going out. There's a lot of changes to this. There's a lot going out, and there's even talk of more stimulus money coming out. So, just be aware of those, what's going on. Make sure that you, make sure that you don't miss anything that might be coming your way. So, another really big change with the act was revolving around health insurance. We've done some videos on health insurance before. If you are on the Affordable Care Act and you are getting subsidized health insurance, the government's helping you pay for your health insurance. When in that situation, you basically go to the Affordable Care Act. You say, I made X amount of money, and they say, well, you're eligible for this much subsidy.
Subsidies. Yeah.
When you do your tax return, there's a reconciliation done. When you do your tax return, you say, well, I made this amount of money. This is how much subsidies I got, and sometimes you have to pay a little bit back, or you even get a little bit more.
Sometimes you have to pay a lot back.
Well, that's it. Sometimes you have to pay all of it back, which is just, like I said, we've had people that owe thousands of dollars at the end of the year in health insurance repayment because they made too much money. So for 2020 only, they came out, the government came out and said that you do not have to repay back your health insurance subsidies. If you got into a repayment situation, they're just forgiving it. You do not have to pay back.
I mean, it's that black and white. It doesn't matter how much money you made, which is odd to us because some people accidentally get these subsidies.
They do.
And then so there's some of these people that just got free health insurance for the whole year. It's kind of odd, but that is only for 2020. It doesn't go into 2021.
Yeah, so 2021, they did make some changes around health insurance. They basically made it easier. Basically, they just made higher income earners be able to get health insurance subsidies. They changed some of the rules.
They widened, who all can qualify for subsidies and how much, I think.
Right. Yeah. So, you still might get into a full repayment situation or a repayment situation in 2021, but they made it a little bit tougher to get into those scenarios. But some changes with health insurance repayments of subsidies, be aware of those for 2020. It's a big deal because, like you said, you could get free health care for 2020 if it was fully subsidized, just simply because you made an error on.
And if you already done your taxes and you paid your subsidy back, then you may have to amend. So hold off, let's wait and see what happens, but you may have to amend to get that to recoup those funds that you paid the IRS. Yeah. Well, no, that's really good information, Andrew. Like I said, there's a lot of things that went into that bill. So, we didn't get into all the nuances and all the details. We just kind of hit the highlights we feel like 95% of you out there would actually care about. But we do a lot of these videos. If you like these videos and you want to see more, go to our YouTube channel and subscribe. Hit the the notification button to be notified when any new videos come up. You can also go to our website, rehcpas.com. If you need any assistance, whether it be small business, accounting, taxes, or even individual taxation, go to our website, rehcpas.com, fill out the contact us form, and we'll get in touch. Thanks.